What's up guys, welcome back to another video. In this video I'm going to be talking about fair value gaps. I'm going to be showing you guys where value gaps occur, how to trade using fair value gaps, well, one trading strategy with fair value gaps, or otherwise known as imbalances. So yeah, I'm going to be showing you everything you need to know about fair value gaps, about imbalances, so let's get straight into the video. So first of all, what is an imbalance, or what is a fair value gap? So all a fair value gap is a gap in the market. So let's say that if you look at the screen right now, we have this candle. Let me take off the indicator. If you look at the chart right now, we have this candle right here that I will highlight for you guys. Then we have a big gap in the market, and then we have another candle right here. So the gap right here from this candle to that candle is an imbalance, because there is no wicks, there is no two candles that join. There is a gap where this candle to the right and this candle to the left do not meet. So what you can do is, if you're new to trading fair value gaps, trading imbalances, then you can just go to indicators. You can search IMB, stands for imbalance, and then add an imbalance indicator. Then it will look something like this. So that was a bearish fair value gap, and then over here is a bullish fair value gap. And these occur a lot in the market, like pretty much most candles have a fair value gap, or have a fair value gap that needs to be filled. And the reason people like to trade these fair value gaps is because it is sometimes a magnet for price action. And the reason that these fair value gaps are a magnet to price action sometimes is because lots of orders lay in these points, because it has not been filled from either of the candles. Now, there is multiple ways you could trade using fair value gaps. You could add it with liquidity, you could use order blocks and fair value gaps together, all different ways using smart money concepts. But the way I specifically like to trade using fair value gaps is by looking for a specific pattern in the market, and this pattern is quite often, and you get a lot of trades using these fair value gaps. So as long as you use the right risk to reward, then trading this fair value gap strategy should be perfectly fine. So let's go to Bitcoin chart. Alright, so here we have a Bitcoin chart. First of all, I just want some of you guys to fully understand what and where to find the fair value gap is. So this normally occurs when you have a bigger candle as well, just so it's easier for you guys to spot. So if we look right here, we have this big move to the downside, well, a big candle towards the downside. Then if you look to the left of that candle, we have this wick right here, and then to the right of that candle we have another wick where it is a gap in the market, and this is a magnet for the price action. So the price action wants to fill these points in the market because orders lay here and orders have not been fully filled that are sitting here. So as we can see right now, the price is starting to come into this fair value gap. This is all live charts, it's not using replay mode. So actually, if we look at this chart right now, we'll go to a 1 minute, or we'll go to a 5-minute chart so you guys can see fair value gaps are being created every single second. So a new candle is about to come in a few seconds, and you'll see a fair value gap being created. So if we look here, so this is the left of this new candle. So in 5 seconds a new candle will show, and what price action will want to do is price action will want to fill this fair value gap. So here we go, we have this fair value gap here right now, and what is price action doing? Price is filling that fair value gap, and then it pushes straight up. So the more that you trade fair value gaps, the more that you'll see that there's different strategies and different things that like to happen with fair value gaps. So sometimes the price will like to fully fill this the fair value gap and then come out sometimes the price action will only like to fill 50% of the fair value gap. This is actually very common. The price will only fill 50% of the fair value gap, and then the price will shoot straight up, or sometimes even the price will just carry on straight down and completely fill the fair value gap, and the price will carry on trading down. This is also common as well. So when we are looking to trade using fair value gaps, you want to have a edge in the market and have a big reason and understanding of why we want to trade specific fair value gaps. So as you can see right now, this fair value gap on the left, because we have this big move down, then we look to the left and we have a price where no wicks are being formed, where there's a big gap in the market, and we draw across, and that is our imbalance. So as we can see right now, the price is filling that imbalance, is not fully filled this imbalance, and yeah, this is just a area in the market where the price action wants to go to. Is sometimes a magnet. So now I'm going to show you a trading strategy that you can use, and that I like to use a lot when it comes to smart money and trading fair value gaps. And the pattern is very simple. I'll explain it in the easiest terms as possible. So what you want to be looking for is, and I'm showing you on multiple different charts this pattern, this trading style, just to show you guys that it is really, you can really use this trading strategy and it works a lot. And for me, it has a high win rate as long as you use the right risk to reward. So all the trading strategy is you have a move to the upside or to the downside. So here I'm going to be using a move to the upside. So if we look right here, we have this move to the upside, then we have a almost like a V pattern that forms. So if you look here, we have a V pattern that forms. So we have a higher low, a higher high, another higher high. So it creates this V pattern. Then what we're waiting for is a break of structure, where you can waiting for a break of structure to the downside. So as we see right here, we have this break of structure, so the price shoots straight to the downside, breaking this pattern completely. So then what will happen is the price will then most likely come back up into these fair value gaps. So as you can see right now, the price has broke structure right here, took out the sell side liquidity, and now price is shooting up. Price fills into this fair value gap right here, and then price goes back down. So that's what you want to be looking for. You want to be looking for this V pattern, just higher highs, higher lows, and you want price action to break structure, taking out liquidity on the sell side, and then you want to enter into the trade using these fair value gaps. Now you can wait for confirmation. You could go into the lower time frames and wait for confirmation and then enter into the trading strategy there. That's what I would personally do. You don't want to be setting limit orders, because sometimes this price action could shoot straight up and completely fill this fair value gap and trade into this fair value gap. So as long as you are waiting for the confirmations using the right risk to reward, then this trading strategy will work perfectly. So if we look again right here, we have the same thing happening again. As I've just said, this is all live. As you can see, this is live charts. So yeah, I couldn't be I'm not on replay mode showing you like a one-off of this happening. This is all live on different cryptocurrencies. This trading strategy works for anything that you want to trade, for stocks, indices, forex. Personally, I just like to trade cryptocurrencies right now. So we have this big move to the upside, as you can see, and I hope you guys are understanding this, because this is a very useful strategy. We have this big move to the upside, creating higher highs, higher lows, higher highs. So you can see here, higher high, higher low, and a higher high. And then what does price do? Price barely, but it does break structure right here. So you can see this is where structure lays, and the price has broke structure just about. And then what does price do? Price comes back up into this fair value gap that is right here, fills 50% of this fair value gap. As I said before, sometimes the price will not always fill 100% of the fair value gap. It will sometimes only fill 50% of the fair value gap. This actually happens quite often. So what you've done here, you would entered into a short position right here, getting confirmation, you could put your stop loss just above this fair value gap or above recent highs, put your take profit at the sell side liquidity, or you could go to a higher time frame and put your take profit to an order block. For example, you could target what you want. I personally just like to leave it at sell side liquidity, so my take profit would have been right here at this sell side liquidity, and then yeah, that would be the perfect 1 to 2.5 RR trade. Even if you want to put your stop loss to the top of the fair value gap, that would have been a 1 to 5, a perfect trade. And yeah, I could show you these examples all day long. They happen all the time. So here we go, another chart. As you can see, we get this nice V pattern. This is what you want to be looking for. Get this nice V pattern, then we have a big move down, breaking structure right here. As you can see, price breaks structure here. So let me draw that on for you. We have the break of structure, and then we have a fair value gap being created right here. So you would mark out your fair value gap. Your price action taps into this fair value gap. As you can see, price taps into this fair value gap, and then price trades out of it. Now what would you do? You'd enter into a short position there. You'd put your stop loss above the fair value gap, or you could put your stop loss at the recent highs. Personally, I like to put it above the fair value gap. I'd put my take profit to the recent sell side liquidity, which would be right here. As you can see, sell side liquidity right here, because it is a recent low. And then yeah, there we go, another 1 to 2.8 trade. So yeah, these trades are perfect. I could keep showing you these examples, as you can see, but I think you get the point. We have the big move up, you wait for the V pattern, you wait for the higher high, higher high, higher low, then you wait for the price action to trade into your fair value gap. So right here, the price has tapped fully out of the fair value gap, filled the fair value gap perfectly. Then the price action has started to mitigate into the fair value gap because lots of orders lay here, but then the price has went down. So this if we entered into this trade, it wouldn't have actually hit our take profit yet, so we'd enter into the trade right here. If we get confirmation, would put our stop loss just above the fair value gap, take profit at sell side liquidity. So yeah, this chart would not have hit our take profit yet, but you get the point. So all you need to understand is that you look for the fair value gaps after the big moves up or the big move downs. It happens. So if you're looking for a big move down, then instead of a V pattern, you want to be looking for an upside down V pattern. So just a pattern like that, and then it'll be that exact same trading strategy. So as long as you guys can mark out fair value gaps, if you can't mark out the fair value gaps, then just go to indicators, add your fair value gap tool, and then you'll be good to go. Just make sure you don't overtrade, make sure you use the right risk to reward. If you're wondering what the right risk to reward is for you, I've recently recorded a risk to reward video, so that'll be great for some of you guys to watch. And I hope this simple but very, very effective trading strategy has helped some of you out, and I hope you guys understand it. If you have any questions, just drop me a DM on Instagram and I'll 100% reply to all of the DMs, or just leave a comment below and I'll reply to all of your messages. So thank you for watching this video.